Okay, so hello guys, my name is Shrek, and in today's video I will present you an amazing project for you, which is the Animal Farm. It will be in a form of an interview. I know that you all like the interviews on my channel, so it is an amazing also opportunity for you to learn more about the project and who knows, maybe invest in it. Remember that I'm not the financial advisor, and if you want to invest in this or in any other project, then do your own research and invest only money that you can afford. And I guess that's all. Have a great listening and watching, and check out all the links in the description to learn even more about the Animal Farm. Okay, so as you heard, we are here with the owner of the Animal Farm, and for the first question, what exactly is Animal Farm?
Yeah, so it's funny you say owner because, I sometimes would refer to myself as a founder. I think a lot of people refer to me as a founder or developer. Owner is a not a way I would describe myself in regards to Animal Farm, because Animal Farm is the first decentralized ownership, yield aggregating, and lending protocol. And when I say decentralized ownership, that is because we have a innovative governance model which allows the participants of the platform to earn a share ownership of the protocol as they utilize the system. And this is done through two assets. We have a AFD token, Animal Farm Dogs token, which is our native reward asset. And then we have AFP, Animal Farm Pigs token, which is our governance asset. And this can be staked. And when you stake it, you get a share of all deposit fees, withdrawal fees, all taxes associated with the platform. You get yield paid out in BUSD through a back-end lending, and you get a vote on all future roadmap proposals. So any kind of major change to the protocol or an introduction of a new partner or anything like that goes through a multi-stage process, ending once it's gone through full audits and through the team ensuring that it's sustainable and it's attractive for new members and it's beneficial to existing investors and it's fully decentralized. And after it checks all of those boxes, then it goes to a final vote where the governance stakers vote on the proposal based on the amount of AFP tokens they have staked in the governance staking contract. And due to this, they have a say in the future roadmap decisions of the protocol. So they are the true owners of the protocol. And this is important because when you look back over the past few years, who are the major beneficiaries of these protocols? And it's always the founders, owners, and the developers. So this is a multi-trillion-dollar industry. There has been billions of dollars paid out to the founders and owners of these protocols, and they're taking the least risk in most cases. And most of these other yield aggregating lending protocols are designed in a way where the owners have a low risk cash flow where they're earning billions of dollars through fees and taxes and costs associated with the platform, and the user is earning some reward asset that they need to speculatively trade in order to earn their profit. And we turn that on its head, and we are truly doing what DeFi is made for. And 99.6% of all the fees and taxes and profit generated by the platform go to the participants of the platform, not to myself as the founder or to the dev team, for example. So this is the major use case of Animal Farm. It's a way to generate yield through lending in a fully open source, fully non-custodial, which means you're the only one that can access your principal and your capital on the system. And in a way that is truly decentralized. And we do it in a way that allows for our dividends to be paid out in BNB and BUSD, which is another extremely powerful incentive structure, because instead of our users needing to earn their profit by speculatively trading and dumping our reward and governance tokens, instead they're highly incentivized to remove the reward and governance tokens from circulation and secure their profit in the form of BUSD and BNB, which in some of our products can be auto compounded back into our native assets. So they're not only being incentivized to remove our tokens from circulation and collect their profit through BNB and BUSD, which is generated through other cash flows, but they're also being highly incentivized to utilize that BNB and BUSD to buy back into our native assets, allowing our native assets to be high performing in all market conditions.
Okay, that was an amazing explanation of the project, but I need to ask you one thing, because as you may know, because of the market condition, there's a lot of people afraid to invest in any projects. So
Yeah.
how can you explain if centralized control is a risk, or is it not a risk? What can you tell the viewers about the
Yeah.
risk in centralized control?
Okay, so what I would say is centralized control is a risk, but primarily due to lack of transparency and a malformation of incentive structures. So when you have a system where the centralized controllers are earning maximal profit by putting their user base and investor base at higher risk, and there's no transparency to allow the investor base to know that they're being put in a high risk system to benefit the centralized controllers, that is the typical construction of these kinds of high risk centralized models that end up blowing up, like Three Arrows Capital did, like Genesis is, like all of these other protocols that have blown up over the past few months. Animal Farm is completely different. So Animal Farm is 100% open source, 100% non-custodial. It's decentralized everywhere that it matters. So we cannot access user collateral. We cannot make any changes to the protocol, which would introduce an attack vector that would allow us to even remove liquidity from our native assets. Our liquidity is completely decentralized and locked, removed from circulation. We lend to, right now, PancakeSwap. So there are several other lending options that will be deploying over the next few months. But currently, right now, we're lending to PancakeSwap. PancakeSwap is also fully decentralized, fully open source, and immutable. So we're earning our yield through a very low risk lending model, which uses zero leverage. So our profits and our yield are coming from the collateral that is staked on our platform being lent to PancakeSwap using immutable open source non-custodial contracts. The capital that is lent to PancakeSwap is then used to fill order books and support the various products on their platform. These products on their platform generate fees, which are a source of profit that get paid out to our user base. So the primary cash flows that are coming from our system are coming from both a low risk lending model and an incentive structure built on the top of our platform. And it's completely non-custodial, completely open source, and fully decentralized from the ground up. So I think that it is important to have some leaders when it comes to development. you need to have some people that are willing to step up and have some vision for the project. And this is a form of centralization. And I think it's important to have some limited exposure to this. Otherwise, you're not going to be able to innovate and progress. But you need decentralization where it matters, and that is the ability to access user capital, right? That should not be something that some centralized controllers have access to. The values that users are agreeing to when they enter the system must be immutable. It can't be set up where some centralized controller can change it at their whim to benefit themselves. And it needs to be open source so everybody knows what their risks are when they enter the protocol. And because we do not use leverage to generate yield, because our yield is paid out in BNB and BUSD, not our native assets, so they do not create sell pressure for our native assets, because we're non-custodial, because we're immutable, because we're truly decentralized ownership, we are able to provide all of the benefits that these other centralized lending protocols were able to provide as far as yield, but we're able to provide greater yield to them at a much, much lower risk. And the most beautiful part about it is the users know exactly what their risks are when they enter, because the contracts are fully open source and they're fully audited as well. So when I speak to audits, there's a distinction that needs to be made. There's a lot of protocols that say that they're open source and audited, but when you look deep into it, you will realize that often the case is that their token will be audited and maybe a couple other contracts will be audited and open source, but a lot of times the meat and the real complex contracts are not audited. And there's several reasons why they do this. For one, because they want to try to protect their proprietary code, and secondly, because they may not be as confident as they are portraying in their code base, and they want to be able to hide potential issues. And maybe that's not even malicious. Maybe they think, okay, we don't have an issue, but we don't want to allow anybody else to find an issue that we're not aware of. So they hide some of their code base. And even protocols like Tornado Cash was doing this. Their contracts are open source, but they were doing some back-end stuff that was centralized closed source. So we have removed all of the major attack and risk vectors of these centralized protocols while increasing the amount of yield that can be paid to our user base. It's innovative, and it's not just a major progression forward compared to these centralized institutions. It's also a major step forward relative to any other DeFi lending and yield aggregating protocols. I mean, there's no other profit-generated yield aggregating protocol that is paying out the yield in third-party assets like BNB and BUSD, right? They're all paying it out in their whatever their native token is, which creates sell pressure. And in our model, you're heavily incentivized to use our tokens just to increase your share ownership of the protocol, to be able to collect your yield in BNB and BUSD rather than dumping our tokens on the market. Because if you dump our tokens on the market, you're leaving a ton of money on the table, which could be collected in BNB and BUSD. And we know that the super wealthy, the people that are actually making generational wealth, are not doing it through selling their assets. They're doing it through accumulating assets with strong fundamental value, and then they're generating profit and dividends from these assets. And that's where they're securing their profit, through putting their assets to work, whether that's through a low risk leverage model or lending or dividends. And our model allows our user base to hit all three, essentially, and all three cash flow models for their assets, and it allows them to generate profit on their assets without ever needing to sell them. So so they can continue to accumulate their strong assets while securing profit in a BNB and BUSD dividend model, which is how you truly build wealth. And we're the first protocol that allows our users to build wealth in this way.
Okay, so you were also talking about lending options. So I have a question about this. Will there be like more lending options, and how would they look like?
Yeah, so currently we have lending for LPs. So the way that our incentive structure works is you stake non-native assets. So you provide collateral, whether that's in LP tokens or single assets. We support a lot of the top tokens. So wrapped Bitcoin, BUSD, a bunch of stable coins, Chainlink, BUSD LPs, USDT, BUSD LPs. We support the major assets for providing collateral on our platform. Currently, right now, only the LPs are being lent out. The reason for that is because we want to ensure that we're earning enough yield through our lending to make it worthwhile. So we don't want to add a risk layer to earn an additional 0.1% APY. And if you look at what single assets are able to earn through lending to PancakeSwap, it's like 2% APY. And it just is not worthwhile. So currently, we're lending LPs to PancakeSwap. This is generating an additional 30 to 40% APY in the form of cake. This cake is then swapped for BUSD and paid out to governance stakers. So when you provide non-native collateral to the platform, you're earning the AFD token, the Animal Farm Dogs token, which is our reward token. Now, you can do two things with this reward token. You can stake it in the loyalty contract, which is the dog pound. It's a loyalty system. But what that does is reduces the tax that you have to pay on selling dogs by 1% every day. And the tax that's generated for people that do sell dogs is swapped for 1/3 BUSD, 2/3 BNB. The BNB gets paid out to the dog pound stakers. So as you're reducing your tax on future transaction of dogs, you're earning BNB from the people that are paying the tax. And the 1/3 BUSD gets paid out to the governance stakers. So as a governance staker, not only are you earning BUSD, which is generated from deposits and withdrawals in the system, you're also earning from any other tax and fees associated with products on the platform. You're also earning 1/3 of all the taxes applied to dogs paid out to BUSD. And on top of this, all of that capital that's being generated through the back end, through the non-native staking, which is earning the 30 to 40% APY in PancakeSwap, that cake that's being earned in PancakeSwap is swapped for BUSD and paid out to the governance staking. So in order to access the back end, in order to access the yield, the BUSD that's being generated through the back end lending that's taking place, you need to take the AFD reward token that you're earning through the staking of the tokens, the non-native tokens, and utilize them by pairing them with BNB or BUSD and farming the governance token, or just outright buying the governance token, because that's how you access the capital that's being earned through the back-end lending. So right now, you can earn about, I think it's something like 120% APY through staking LP tokens on the platform, paid out in AFD token. But this AFD token has a unique vesting model, which ensures that people are not able to dump them on the market. So they can be utilized in two ways. Either you stake them into the loyalty contract, which reduces your tax over time, allowing you to eventually sell them at some point if that's what you choose to do. Or you can utilize them to increase your ownership of the platform by farming the AFP, the governance token, with them. So I'll go further into this incentive structure because there's a lot more to it. But just to specifically answer your question, it's it's a little bit difficult to answer your question directly without giving a little more insight into protocol as a whole. But just to get to it right now, um, very shortly we will be having single asset lending options as well. So there are several ways that you can generate significant profit by providing collateral in single assets. It's not through lending to PancakeSwap because you can only earn 1-2% off that, but there are some fully decentralized, non-custodial bridges that allow you to provide collateral to one side of the bridge to allow people to bridge their tokens from chain to chain and earn 20-25% APY. So over the next couple months, we'll be introducing a single asset lending option as well, which allow people to not only earn AFD token, reward tokens through staking single assets like BUSD, BNB, stablecoins, all of these assets on our platform, but also earn an additional 20-25% APY, which is auto compounded back into their principal. So, say we do back-end lending to Stargate. So there's 3 bridges we're looking at right now to do this lending to. It's AnySwap, Seller, and Stargate. And they all pay out native reward tokens to provide collateral. And it's significantly more than lending to a DEX. So when you provide this BUSD, for example, to our platform, you stake BUSD collateral on our platform. This BUSD earns AFD token for you, the reward token, which you can use to increase your ownership of the protocol itself. And this BUSD gets lent out to a bridge, let's say Stargate, for example. It earns the Stargate token at 20-25% APY. It sells the Stargate token for BUSD, and then it adds that BUSD to your principal, allowing you to earn compound interest in the form of BUSD without adding any sell pressure to our asset. And a portion of that BUSD which is generated is sent to the governance staking protocol and paid out as a BUSD dividend. So in order to secure all of the yield that you're generating through the backend lending, you have to utilize some of those AFD tokens that you're earning, the Animal Farm Dog tokens that you're earning, to increase your ownership of the protocol. And that can be done by either swapping your AFD token for AFP, or by using the AFD token, which is the smarter way, to farm AFP tokens and generate yield, and then stake those AFP tokens in the governance protocol, which increase your share ownership of the protocol. So that is one additional lending option that we are introducing to the system over the next couple of weeks. And then a major innovation that we plan to get out by Q2 of next year is something that we call individualized lending pools, right? And this individualized lending option will allow anybody to create a lending pool of effectively any asset, and they can initialize a pool by either providing collateral or providing to the lending pool. So basically staking an asset, saying they want to lend out this asset. And as long as there's someone providing collateral that wants to take the loan and someone that wants to issue out a loan, this lending pool is created. And now the interest that is paid on the loan is relative to the ratio of people providing collateral to people issuing the loan. And of course, the more people that want to issue out the loan relative to the people that want to provide collateral, the lower the interest the people that want to take out the loan have to pay. and it's a model very similar to a DEX where anybody can create pools. And I believe it's going to revolutionize the space in a way that is as powerful as how DEXs revolutionized the space. Because there's one thing that allows markets to function. And well, one of the major things that allows markets to function, and that is liquid lending pools, and the uh, the ability for collateral and for assets to freely move through hands. And right now, that does not exist in DeFi. There is not a way that someone can easily say, hey, I got these tokens, they're sitting in my wallet, I want to lend them out to earn yields. And just lend them out and have anybody seamlessly say, okay, you want to lend out these tokens? I have some tokens I want to put up as collateral, and let me take the loan. And right now, the only option to do that kind of thing is limited to like 4 or 5 assets, right? A couple stable coins and like wrapped Bitcoin. It's extremely limited, and the yield that is that you can generate through lending these assets is extremely small, right? Where we could use the same cash flows that we're providing right now in Animal Farm to increase the yield of this individualized lending to really make it worthwhile for lenders and make it extremely liquid, where effectively anybody can set up a lending pool at any time and it can service all of DeFi. But of course, it's providing a major benefit to Animal Farm because that's where people are going to create and initialize these lending pools, and a portion of the fees and costs associated with initializing lending pools and taking loans and all of that will go to support our assets. So this is going to revolutionize the space, and we have all of the logic worked out for it already. We have a massive development team. We have a 7-man development team right now, not including project managers and marketers and all of that. And we are just ready to go full force. And we already have 5 or 6 products that are in the end stages of development or already developed that we will be putting out every other month up until 2024. And what I'm most excited about is this individualized lending option, which we want to get out by the first half of next year. But you're not going to have to wait for new products to come out. First of all, Animal Farm is a finished product, right? It's fully functioning. It's like ranked number 8 right now in DeFi, and it's only like less than 2 months old, right? So it's kicking ass. It's fully functioning. It's doing amazing. But we have a ton of products ready to go, and really our main thing is just ensuring that we space them out on their delivery enough so we're able to educate our investor base and our user base, and we're not just overwhelming them. But yeah, we have a lot of things coming, but new lending options and additional lending options is one thing I'm extremely excited about. I'm also excited about doing a form of insurance model, similar to how Binance has their Seifu, where a portion of fees and taxes go towards a basically an insurance pool that can be used to secure a portion of users' principal in case something ever happens to one of the platforms that we're lending to. We can secure a portion of the user's capital that were exposed to that. So there's a lot of things that we have in the works to allow us to become a leader in the space. And we're already doing that. Like, we're less than 2 months old. We're already ranked number 8, and we're making huge progress here, even in these market conditions. So yeah, it's very exciting.
Well, congrats. That's all sounds really, really amazing. And that's also good that you're some kind secured, yeah? And that you're also thinking about the future of the project. You are not only creating a project, but also trying to make it as best as it could be possibly. So that's just amazing. and mind-blowing in my opinion. But you were also talking about some of your tokens, about the AFP, which is pigs, and AFD, which is dogs. So I have a few questions, I guess, too, about those tokens. So for the first one, what are the basic functions of those tokens? And for the second one, you ever considered like fiat integration, for example, making it possible to purchase the AFP and AFD with a debit or credit card? It would be very, very cool in my opinion.
Yeah, okay. So this I spoke a little bit to the utility of the tokens earlier, just because it's really important to have some understanding of them for me to explain the other questions you asked. But I'm glad you asked this, because there's a lot more details to the tokenomics and functions of these tokens that you really need to understand how powerful this system is. So let's just start with AFD. The Animal Farm Dog token is the reward token that you earn through providing non-native collateral to the system. When I say non-native, I'm just speaking to any tokens that are not AFP or AFD. So when you stake any tokens on the platform that are not AFP or AFD, you're earning our reward asset, our reward token, which is AFD. Now, unlike other platforms, and when I say other platforms, I'm talking about every other platform out there that generates yield, we do not blindly emit rewards. If you look at how every other platform works, PancakeSwap, every other one, they mint and inflate the supply at a specific rate, block after block after block, and this never adjusts. It never adjusts to market conditions. It never adjusts to demand for the asset. The asset's demand could be way down, and they just keep inflating the supply like crazy. And this is just not an efficient or appropriate way to manage the supply of an asset. But you still do not want to have some centralized controller like a Federal Reserve determining what the inflation rate will be. What we have is something which is extremely innovative that we designed, called the decentralized dynamic supply control algorithm. And what this does is it's a fully on-chain algorithm, which is also open source, that looks at several values such as price, volume, other values, to determine the current demand for our native assets, and sets the emission rate. So it sets the rate of supply to the current demand for the underlying assets. So it can do it within a range. And the reason why it's a set range is because we want to ensure it never goes above what's sustainable and it never goes below what's attractive. But when the demand is at all-time highs, the emission rate is at all-time highs, because the system the buyers can absorb that inflation rate, and it maximally incentivizes people who are buying these tokens to remove them from circulation to earn a increased APY. And now when the demand wanes, because we recognize that the demand for an asset sometimes has nothing to do with the asset or the platform itself, it has to do with overall market conditions. So we understand that regardless of what we do, there will be times of high demand and times of low demand. And our system recognizes these types of low demand just by using on-chain values. It is able to reduce the inflation rate, shrinking the supply in times of low demand to the point where the assets are deflationary. So they're being removed from circulation due to the taxes associated with them and due to the incentive structure removing the tokens from circulation at a greater rate than what they are being emitted. And there's really only two major factors which are determining price, and that's supply and demand. And you can do things such as what we're doing right now, promotion, to help increase the demand. But the one thing that you have the most control over is supply. So in times of low demand, you need to be able to shrink the supply, but you want to be able to do it in a way that's fully decentralized. So there's no kind of centralized manipulation of the supply. And we allow for that in our system. So that's one thing that I want to speak about. Our AFP and AFD tokens are rewarding the user, but rewarding the user in a way that is always sustainable and always allows for the price performance of these assets in all market conditions, the optimal price performance. Now, the AFD token, you're earning that through providing collateral in the system, which is then lent out to profit generating services on other DeFi platforms. The AFD that you earn starts out with a variable tax model. So, other platforms, there are other platforms that have vesting models. And what a traditional vesting model looks like is they just remove your tokens from circulation and lock them up. So it's just the stick model. So I like to say a stick and carrot model. You disincentivize negative actions and you reward positive actions. Traditional vesting models only have the stick, right? They're only basically punishing or in reality they're not even they're just completely removing the user's ability to access their capital, right? Which is just the stick, right? But in order to have a proper incentive structure, you need to not only disincentivize negative behavior in the protocol, you have to also reward positive behavior. And our unique vesting model does this, and it also does not fully lock up user capital. And the problem with fully locking up user capital and having predictable unlocking events like these other protocols have is people are paying attention and insiders know, hey, once a month there's this unlock event where a bunch of tokens become unvested and a bunch of tokens are going to hit the circulating supply. And this is going to have a negative impact on price. So even people who support the platform know I better sell before this unlocking event happens. And maybe I'll buy back in later at the bottom, but even the people that support the project are going to sell before these predictable unlocking events. And oftentimes, even if people do say, hey, I'll buy back in later, often they don't. Once capital has left the system, it's very difficult to get that capital back into a system. So our model does not have these predictable unlocking events, and it does that by, instead of locking up your capital 100%, it has a variable tax where when you initially earn AFD tokens, it starts off with a 90% tax. So only on selling though, not on utilizing the token on any of our products, only on selling. And what that means is if you were to take the AFD tokens that you're earning through providing collateral on the platform and immediately dump them, you're going to lose 90% of that value. Where does that 90% of value go? It gets swapped for BNB and BUSD, 2/3 BNB, 1/3 BUSD. The BNB gets paid out to people in the loyalty contract, which we call the dog pound, which is the AFD staking contract, and the 1/3 gets sent to the Pigpen, the governance staking protocol, in the form of BUSD. So it's not only disincentivizing the selling, the dumping of our native asset as people earn it as a reward, it's also rewarding people for removing these tokens from circulation. Now, on top of this, when you stake your AFD token in the dog pound, our loyalty contract, you're earning loyalty points, which reduces the tax that you have to pay on selling the dogs that you have staked. And you're reducing your tax by 1% a day. And what that means is after a few months, you've reduced your tax all the way down to 6%. And now the tax never gets below 6%, which ensures there will always be some BNB and BUSD being generated from the tax that is rewarding users for being staked in the protocol. But what this does is it rewards people for removing their dogs from circulation. They're earning BNB the whole time while reducing their tax, and everybody needs to make up their own mind when it makes sense for them to sell dogs based on what their given tax is. And everybody's tax is reducing at a different rate, so there's never one predictable unlock event where the circulating supply increases by a lot and people need to front run and dump that. Everybody has to make up their own mind based on the price performance of dogs when it makes sense for them to take a little bit of profit by selling dogs. And for most people, it will never make sense to do that because they're earning a ton of B&B through having their dogs removed from circulation. And there's two dog pound contracts. There's the auto dog pound and there's the normal dog pound. The normal dog pound, you're earning this B&B and you're having your tax reduced. In the auto dog pound, you're having your tax reduced at a 25% greater rate. You're earning 20% more B&B per dog that you have staked relative to the non-auto dog pound. And what's most powerful about it is the B&B that you're earning, half of it is being used to buy dogs, buy the AFD token. It's pairing it and staking it in the dog's B&B liquidity pool to earn AFP tokens. So you're earning compound interest in the form of B&B while you're increasing your share ownership of the protocol through generating and accumulating the governance asset AFP while reducing your tax on your AFD token. And the reason why you would want to do this, apart from all the other reasons that I just mentioned, is due to something that I talked about earlier, and that is that the additional yield that's being earned through the rehypothecation, through the back-end lending to PancakeSwap, that additional 30 to 40% is being earned on basically all the TVL on the platform, hundreds of millions of dollars, is being paid out in the form of BUSD to the governance protocol staking contract, to the Pigpen. So if you just have non-native collateral stakes on Animal Farm, you're earning your reward in the AFD token. But in order to capture the BUSD that's being earned through the lending to PancakeSwap, you have to use that AFD token to increase your ownership of the protocol by either swapping it for AFP or using it to farm AFP and staking those AFP in the governance protocol to earn that yield that you're generating from the back end. So it's a multi-layer incentive structure that is ensuring the people who benefit the most from the protocol are the people that are utilizing our native assets to increase their ownership of the protocol and earn their yield in BNB and BUSD dividends rather than selling our native assets on the market for short-term profit. So, as I was saying earlier, it allows users to increase their asset holdings of strong fundamental assets while earning a dividend in BNB and BUSD, which is kind of the equivalent to holding a strong stock, like an IBM stock, and earning yield in the form of a USD dividend. So you can utilize that USD to buy more IBM stock and to secure profit, and you never have to sell your asset, which is the IBM stock. Our equivalent to that is our AFP and AFD tokens. But of course, because we're fully decentralized, because all of the functions are being called by the user themselves, because all future roadmap proposals are triggered by governance voting, and all of the benefits of the protocol as far as founder fee and owner fee goes to the stakers, it's completely removed from the kind of centralized security model of a stock. So it's really like the best of both worlds.
Okay, so as you can see, guys, this project looks very, very promising. And I think that the best for you is to take a step right now, check out all the links in the description and just step into the animal farm, into their tokens, into their lending and many, many more functions, because it is just amazing. And it was a last question in our interview. I am very, very grateful that you joined me, that you explained how does the animal farm works, and maybe if you guys have any questions, feel free to ask them in the comment section, and maybe from those questions we will do another interview. What do you think?
Absolutely, yeah. I appreciate the opportunity. I understand that the system has a lot of moving parts, and it seems somewhat complex when I explain it. But if you go and you look at our documentation and you visit our communities and you just check out the platform, you will realize that it's as simple as online banking. It's as simple as any other kind of DeFi staking protocol. And a lot of these innovations and incentive structures and all of this additional stuff that I'm talking about is handled for you through smart contracts. And it's no harder to use than PancakeSwap staking or any of the others. But the benefit is that not only are you earning rewards in our protocol, you're also earning as if you were staked in PancakeSwap as well. So you're getting right now, PancakeSwap is the highest TVL farm, right? It's the highest TVL yield generating platform. And what Animal Farm does is gives you full exposure to PancakeSwap, allowing you to earn as if you were in PancakeSwap while also earning our native assets and additional cash flows that we are generating through both our lending and our incentive structure. And of course, we have a much stronger roadmap than any other protocol out there. So I would say if maybe you're new to this, you're a little bit confused by some of the terminology we used, something like that, visit our Telegram group. It's extremely active. We have strong documentation that you can check out. And absolutely, we can do a follow up here. And I'm sure that there's a referral system for Animal Farm. It's a very well structured referral system where, due to the fees associated with depositing and withdrawing, it is not profitable to self refer. So it's not a referral structure that can be exploited like other referral structures in DeFi where people just self-refer themselves a bunch of times. And on top of this, the reward that goes out through referring is coming from the profit that the person that you referred generated. So it's not coming through inflating our supply or anything that would cause sell pressure. So it's a very well designed incentive structure that allows for users to benefit through referrals, and depending on the product that the person that you referred utilizes, you can earn anywhere from 2 to 5% of the yield that they generated, and it's that yield is earned at the time that they claim their rewards. So I'm sure that you can let your user base take advantage of this, and maybe you could earn some referrals through this interview. And any questions that you have, we'll do a follow-up maybe a month from now or something, and we'll answer them, and hopefully you're able to do some good onboarding, and when I come back on, a lot of your community will be involved.
Yeah, sure, this would be amazing. And as you guys heard, this is the project for everyone. If you are neither a newbie in a cryptocurrency world or you are advanced, this is the project for you, and you need to check this out through the link in the description. So once again, thanks for the interview, and I guess it is all. Thanks guys for the watching as well, and bye.